In this video, I will describe some of the fees commonly charged when you borrow from banks and credit unions. Make sure to watch other videos in the series to learn more about loans. When borrowing money from a lending institution like a bank, borrowers agree to pay fees in addition to paying interest. Typical fees include processing and origination fees, sometimes called activation fees, late fees, and sometimes even early termination fees. Processing and origination fees are generally paid to compensate the lender for the time and effort it takes to issue the loan. These fees often cover legal fees, background checks, and credit checks on borrowers, among other things. Sometimes lenders will charge a slightly higher interest rate for the loan in lieu of charging these fees up front, such is often the case for federal student loans, where the loan fees are proportionally spread out between borrowers' payments. Late fees are generally penalties designed to deter borrowers from missing payments. In some cases, as with credit card loans, missed payments can increase the interest rate on future payments. Early termination fees are designed to provide lenders with extra compensation in the case of early repayment. For example, consider the case of a borrower who receives a sudden windfall of cash and decides to use this cash to pay the balance of their mortgage early. The lender no longer receives the interest income they were expecting. The early termination fee helps to defray some of that lost income. By the way, early termination in a mortgage is known as prepayment. Prepayment is by no means limited to just mortgages, though. Some types of private student loans are also subject to these fees. Please be aware that even though you may have to pay a fee for early repayment, it may still be cheaper to do so than paying according to your scheduled dates. The fees that apply and the amounts of those fees can vary widely among lenders, even among lenders providing similar types of loans, so it's difficult to determine a rule of thumb for fees. For example, some mortgage lenders may charge significant amounts for origination, while others may instead recoup these fees through charging higher interest rates. When considering which lender to borrow from, be sure to factor in the total cost of all fees, along with the interest rates that they are charging. Fees should be fully disclosed by the lender and fully understood by the borrower before entering into a loan agreement. Be sure to read all of the fine print before signing.